Hi there, Serial Trader here. Let's dive into the major US indices. And since the last video, we've formed a significant top. And just about to the top of that Elliott final channel, and then a nice reversal. It also lined up quite well with some of those wave relationships that I made in the last video for a potential wave 5 target. I believe the 618 relationship of waves 1 through 3 off of 4 for wave 5, and also the wave 1 versus 5 equality relationship. They were pretty close to this 32-33. It basically fell in between those two targets. And then, of course, like I said, the top of this Elliott final channel. So now it's quite confident to say that wave 5 of possibly a larger wave 1 is in place. It's pretty hard to argue that, this isn't 5 waves off the March bottom. It certainly looks like a very clean, reasonable 5 waves off the bottom, no overlap, etc., etc. Now, the only thing that would question that is if we just keep dumping way beyond what we would expect in a normal pullback and start looking like we're going to challenge the March lows. Then we'd have to reassess this being 5 waves off the bottom. But currently, there's absolutely no reason to do that. So right now I am viewing this correction underway as likely a 3-wave decline for a wave 2. But of course, if things change enough, we can reassess that. But for now, that's what we're going to run with. And I'll also highlight we have a nice island reversal gap here. So a clean island of price here with a nice gap on either side of it. So far that gap hasn't even been tested, although that could change here fairly soon. So that's a nice technical reversal as well, aside from the Elliott count completing there. Now, if I just go in here on the, let's say the 30-minute chart, look at the shorter term wave structure, you can count a clean 5 waves down. Okay, so we could call this wave 1 down, then I'd say A, B, C up, expand flat 2, that's our 3, 4, and then 5, and actually A, B, C, D. I think we actually had a little triangle 4, and then a quick little pop down in 5 today if you go on the shorter time frame. But on this 30-minute chart, it won't really show those subwaves too well. Nonetheless, you can count a clean, non-overlapping 5 waves down. Very obvious wave 3, very long, very aggressive. So certainly has the characteristics of an impulsive price move. Now the next, if I just go back up to this daily chart here, and let me get rid of the little subdivisions, and they would have been of that degree actually. But I'll get rid of those 5-wave subdivisions. So now that we look like we have 5 down complete for A, and also, so this overall fib retracement of the entire move up off the March lows, we basically stopped today right on the first minor retracement level, which is the 236, 23.6% retrace. We went just a few points below that. Let's see, we went as low as 29.84. That would have been 29.87. So get a nice reaction off that 236, which has me thinking we're not going to go super deep here. If the A wave only did the 236, we bounce up in B. When we go down in C, we might only be looking at the 382 or the 50 or somewhere in that range. So based on that, I'm kind of doubting that we get a really deep retracement, but maybe 50% or in between 38.2 and 50% would be a reasonable expectation. But now, if we go to, let's say the hourly chart here, so it looks like we have 5 down in place for A. So now we're expecting a pop up in B. And let me just get rid of that 236. So, I mean, if we get a pop up in B, we'll just have to see how this develops, because it looks like we just started bouncing today towards the end of the day. But anywhere between a 50 and 618 retracement in a B, between 31, let's say 3100 and 3140 or so. If we only do a shallow retracement, maybe 3080 for a 382. So we'll just wait and see. But right now, as far as a trade decision to make, well, you could try and go long and catch this B wave bounce. Not an unreasonable trade to take. Me personally, I'm going to wait for this B wave bounce to develop. When it looks mature, when we get into some sort of fib retracement, looks like we're starting to roll over. My play will be trying short for the C wave down, and then of course when the C wave down looks mature and complete, I'll be very interested in more aggressively going long on a longer term basis for what could be a third wave up, right? But just not there yet. So a couple trades to look at: long for B, and then short for C, and then of course long for that larger 3 once we get that development. But right now, there's still plenty of pattern that needs to play out before we get those high conviction trades to put on. So for now, all we know for sure is that we have a 5 wave down off the top, likely in a wave A. I mean, it's possible that our 5 waves down isn't quite done yet. It could subdivide lower, but I'll just hazard a guess that it's in place as of today, and that we're looking for a larger bounce up in B. So that's my stance here. Again, subject to change, but some things that we definitely have. We definitely have a completed 5 wave structure off the March lows, and we definitely have a 5 wave move down in likely a wave A from that completed structure. So correction is underway. That's a pretty high confidence thing to say at this current point. All right, and you can see on the daily MACD, we're getting a little bearish crossover. So usually there is some follow through when you get those. And we've obviously, after getting overbought on RSI, we're working off that overbought condition. We're certainly nowhere near oversold. RSI so far has gone as low as 48. So just a remark on those things. And what else is there to say, really? Oh, and I guess technically you could say we haven't actually broken out of the Elliott channel yet. We've just basically bounced off the bottom of the channel, which isn't all that unusual for the initial stab down. But after we correct up in B and roll over again in C, we will certainly expect to get out of this Elliott channel. All right. And some other things. Maybe go to I'll go to the 1 hour. So this B wave, I mean, we're expecting some sort of corrective move up in B. Now, is it going to be a 3 wave, just a zigzag up in a wave B? Or is it going to be, it could be a triangle. We could do a B wave triangle, right? And let me just, B wave triangle. Or we could, do a WXY, double zigzag. So there's a lot of possibilities to how this B wave will form. And actually B waves, it's pretty common that they have some complexity to them. So we may not just get a clean ABC up for B, but we'll just wait until some pattern development occurs before trying to assess, what the B wave is as far as the pattern. Anyway, just thought I'd mention that. And then, of course, whenever that B wave is complete, we'll be looking for a 5 wave move down to complete wave C of possibly this larger wave too. But let's not get too far ahead of ourselves yet. Okay, so that's really what I wanted to go through here on this, on the Elliott count here on the daily chart. So if we go to the Thinkorswim candlestick chart, daily candles. So yeah, we got our island reversal here. We didn't actually get up to these more exuberant targets of potentially filling this gap, which would have been at 33.28, and then of course the all-time high was at 33.93. So we didn't get to that extreme scenario. I didn't rule it out, but I would have been a little surprised if we got that extreme without starting our correction. So no, we didn't get there, and now the correction has started. So I like that. Now you can see we've had a little bit of a bounce here. I guess you could say off this 200-day simple moving average. That's not unusual to have some interaction here on SPX with that major moving average. You saw over here, you had a little interaction with that 200 before you finally got that big flush down. So here you could have some more interaction there before a little move down in a C wave. Okay, and obviously coming off that overbought condition finally. Not oversold yet on this daily oscillator, just so I mentioned that. And what else do we have? I believe on the weekly chart, we have a nice reversal candle. Now, it was shaping up to be a bearish engulfing candle, but it closed just shy of being a bearish engulfing. So this previous week opened at 30.38.78, and we closed this week at 30.41.31. So just by a few points, it's not technically a bearish engulfing pattern, although it certainly has a spirit of one. I guess you could probably call this a really powerful dark cloud cover, where, the dark cloud cover pattern only needs to close, about halfway or below halfway the previous candle's real body. So obviously we did a lot more than that. We almost did a full engulfing candle. So certainly a bearish reversal candle on the weekly. So just thought I'd mention that. So ideally we get, at least 2 or 3 weeks roughly of follow through. Now back to this daily chart. I mean, it would be kind of silly to expect that this run up we've had since March, that just ended on June 8th. So March 23rd to June 8th. It's kind of silly to think that this entire 5-way move up has already been corrected in 1 week or less than 1 week's time, or that we're going to correct it in only 2 weeks. I'm thinking, minimum probably 3 or 4 weeks, maybe more. As far as, there's one thing to correct the price, but we also need to correct the time as well, right? So things have to be proportional. So just keep that in mind. I mean, don't be looking for the ultimate low right away here. It's not likely going to work out that way. Okay, so that's the SPX chart. That's all I wanted to go through there. On the Dow, same island reversal pattern here on the Dow. And, just to point that out, I know I already showed it on that other chart there for SPX, but island reversal on the Dow there. Nice clean island gap. So that's a very nice technical reversal signal. And yeah, we're, well below the daily T line, closing below that T line. We're actually well below the 200-day moving average on the Dow. So the Dow is just a little bit more weak. It seems to have been weaker this whole time, so that's not surprising. And today, basically just kind of a doji day on the Dow. Small real body, large upper and lower shadow. So after a strong candle, it's not unusual to have some consolidation, if you will. Okay, and let's see, the Dow actually make a new low today. 25,082, 20,000. Yeah, so we just made a marginal new low on the Dow. And let me just see on this 10-minute chart. Yeah, it looks like we got 5 waves down, probably for wave A on the Dow as well. Maybe throw on a 30-minute. Yeah, it looks like a fairly mature looking 5 waves down. Okay. And on the Dow weekly, let's have a look. What kind of candle we got? So yeah, we'll call that a strong dark cloud cover candle again. Didn't close low enough to be an engulfing candle. So similar picture there to SPX. All right, so let's move on to the NASDAQ. So on the NASDAQ composite, not an island reversal, but we do have a gap down that has not been filled. And we're closing below the daily T line here. And it looks like the NASDAQ getting a little bit of a bounce off that 20-day simple moving average. Now let's just look at the 30-minute chart here on the NASDAQ. Can we get five waves down here? I guess. If we go to the 10-minute, see if we can get 5 down out of that. So 1, 2, call that all of 3. Maybe we got our A, B, C, D, E, wait for a triangle, then a little thrust down in 5. Okay, so that works fine. So it looks like we have 5 down for A on the NASDAQ as well. Now we're starting our B wave bounce up. So basically the same as SPX. And we're obviously not looking for as deep of a retracement on the NASDAQ composite because it's just been so much stronger. It will likely have a weaker correction or a less severe correction. So even if we get a 38.2% retracement of this whole move up on the NASDAQ, I think that would be doing okay here. Subject to change, of course, but just based on where this A wave has likely ended, we got a little B up. I mean, it might even be a stretch to get a 38.2% retrace on the NASDAQ, just based on what I'm currently seeing. But we'll have to see. I mean, this thing can certainly get a little stronger to the downside and surprise us, but currently, that's all I'm really looking for. Okay, now weekly candle on the NASDAQ. What do we got here? Anything important, significant? So a weekly reversal candlestick. We'll call it a dark cloud cover candle. So fairly similar weekly candles in all the indices. Okay. Well, we'll move on to the VIX. Now, the VIX got right down to that 200-day simple moving average, and what a nice pop off of that. Wish I would have bought some VIX calls off of there, but I didn't. I guess I didn't really believe in the potential of bouncing so significantly off that 200, at least right away, but it happened anyways. So, and we broke multiple previous resistance levels on the VIX, but this one remains intact, which is 47.77. And looks like VIX had a pretty strong reversal candle down today, so that likely coincides well nicely with marking the end of our A wave down on the indices. Okay, so VIX might go a little higher once we get our C wave down, but I'm not expecting anything like 85 like we did there in March on the VIX. So just keep that in mind. And if we go to the VIX VVIX tool, we actually got a pretty nice signal there. So we did have that little VIX VVIX divergence. I believe I was starting to point that out in the last video. And then we did get above the red moving average on VVIX. And there's that little yellow square kind of highlighting that moment. And then of course we got below the blue moving average on SPX. And we're well below it still. And the blue moving average is actually finally curling down, which it hasn't been doing for quite a while. So keep that in mind. Now, oftentimes this blue moving average will act as support or resistance while the move is still in place. So maybe we get our B wave bounce up here on SPX. Maybe we find some resistance at that blue moving average. I think that lines up well, currently fairly well with some of those fib levels. So right now around 31.41 is that blue moving average. I think that was pretty close to the 50% retracement or thereabouts. I have to go back and check, but I think it lines up pretty well with that. So just keep that in mind. All right, so yeah, we're on a confirmed sell signal here on the VIX VVIX tool. That's all I really wanted to mention. And yeah, that should be good. So everyone have a great weekend. Nice to see finally some less lopsided action on the market. We were certainly due for correction, and it certainly looks underway at this point. So bottom line, depends how you want to play this. You could play long for this B wave up, but me personally, I'm going to wait for the B wave bounce up, and then I'm going to try and put on a bearish position to catch the C wave down, and then of course at that point, I'm going to be very interested in going long in a more significant way for, you know, basically the resumption of a larger bull market. So that's where I'm currently standing with that. All right, Serial Trader signing off.